Imagine this: you wake up one morning, check your investment portfolio, and bam! Half your life savings gone. Poof! Just like that. Sounds like a nightmare, right? Well, for some, it's a brutal reality. Welcome to Financial Disasters, when investing goes wrong. I'm your name, and today, we're diving into the jaw-dropping stories of financial ruin, the shocking mistakes that led to them, and the lessons you must learn to avoid becoming the next victim. Buckle up, because this is going to be a wild ride. From billion-dollar blunders to everyday investors losing it all, these stories will leave you stunned, shocked, and maybe even a little scared. But don't worry, we'll also show you how to protect yourself. So, grab a seat, and let's get started. Let's kick things off with the big ones. The financial disasters that made headlines, ruined lives, and changed the world forever. First up, the 2008 financial crisis. You've heard about it, but do you know how it really happened? It all began with subprime mortgages. Banks were dishing out loans like they were candy, no questions asked. They targeted people who could barely make ends meet, luring them in with promises of homeownership. But when the housing bubble burst, it was chaos. Millions lost their homes, their jobs, and their life savings. The real kicker? This wasn't just a stroke of bad luck. It was a perfect storm of greed and negligence, with regulators turning a blind eye. The system was rigged, and the fallout? A financial crisis that shook the world to its core. It's a stark reminder of how unchecked ambition can lead to devastating consequences. It's infuriating, isn't it? The people who orchestrated the chaos walked away without a scratch, while everyday investors like you and me are left to pick up the pieces. We trusted the system, believed in the promises, and what did we get? A front row seat to a disaster that could have been avoided. The truth is, this isn't just an isolated incident. It's a pattern, a cycle of greed where the guilty evade accountability. And just when you think it can't get worse, the next disaster looms on the horizon, ready to shake the foundations of our financial security even more. Buckle up, because the real story is just beginning, and it's going to be a wild ride. Before we jump into the next big disaster, let's take a moment to breathe and think strategically. Here's a pro tip: diversify your portfolio. Seriously, don't put all your eggs in one basket. Imagine relying solely on one investment. If it tanks, you're left scrambling. Instead, spread your investments across different assets: stocks, bonds, real estate, maybe even a little crypto. Each asset behaves differently in various market conditions, which helps minimize risk. Think of it as a safety net. When one area dips, another might soar. Trust me, in the long run, you'll be grateful you played it smart. A well-diversified portfolio is your best friend in the unpredictable world of investing. Now, back to the chaos. Life has this uncanny ability to throw us into the deep end, doesn't it? One moment, you're sipping coffee, and the next, you're navigating a whirlwind of deadlines, unexpected phone calls, and that one friend who always needs a favor. It's like juggling flaming torches while riding a unicycle on a tightrope. You think you've got it under control, but then bam, a curveball hits. But here's the thing: chaos isn't just a mess, it's a catalyst for creativity. In the midst of the storm, ideas spark like fireworks. When everything's in disarray, we find new paths, discover hidden strengths, and sometimes even laugh at the absurdity of it all. So, embrace the chaos. Dive into it. It's where the magic happens, where we learn to dance in the rain instead of waiting for the storm to pass. I was once the king of Wall Street, a name that echoed in the halls of finance. For decades, I lured investors with promises of extraordinary returns, a seemingly foolproof strategy that turned into a web of deception. I crafted a facade of success, while behind the curtain, I was orchestrating the largest Ponzi scheme in history, a staggering $50 billion scam. Every check I wrote, every statement I sent, was a carefully constructed lie. I was a master of manipulation, convincing even the most astute investors that their money was safe with me. But the truth? It was all smoke and mirrors. When the market crashed in 2008, my empire crumbled, revealing the shocking reality: I had been robbing Peter to pay Paul for years. The fallout was catastrophic, leaving thousands in financial ruin. My legacy? A cautionary tale of greed and betrayal that will haunt the financial world forever. Madoff wasn't actually investing anyone's money. He was running a classic Ponzi scheme, using funds from new investors to pay off the old ones. It worked beautifully until the 2008 crash hit. Suddenly, the whole facade crumbled, and thousands lost everything. Celebrities, charities, even retirees were left with nothing. What's wild is that people trusted him completely. He was the former chairman of NASDAQ. He had the credentials, the charm, and the confidence that made everyone believe he was the real deal. But behind that polished exterior was a ticking time bomb, and when it exploded, it shattered lives and trust in the financial system. It's a stark reminder, sometimes, the most legitimate-looking opportunities can hide the darkest secrets. So, what's the lesson here? Always do your due diligence. If something sounds too good to be true, it probably is. Take, for instance, the rise and fall of a certain investment scheme that promised sky-high returns with minimal risk. Investors flocked in, lured by the glittering promises, only to find themselves caught in a web of deception. It all started with a charismatic figure making bold claims, backed by flashy presentations and testimonials. But behind the scenes, the numbers didn't add up. As the truth began to unravel, countless individuals faced financial ruin. The moral? Never skip the research. Trust your instincts, and remember, if it seems too good to be true, it usually is. Did you know that during the 1929 stock market crash, some investors jumped out of windows because they couldn't handle the losses? Yeah, it got that bad. Investing can be brutal, but it doesn't have to end in tragedy. Stick around to learn how to protect yourself. Ah, cryptocurrency. It felt like the Wild West of investing, didn't it? In 2021, everyone was buzzing about Bitcoin, Ethereum, and even Dogecoin. I mean, people were raking in millions overnight. It was exhilarating until it wasn't. The market crashed, and billions just evaporated in a matter of months. What's wild is that many investors jumped in without a clue about what they were really buying. They saw the hype, the flashy gains, and thought, why not? But when the dust settled, it was a harsh reality check. The lesson? In this digital gold rush, knowledge is your best investment. Crypto is highly volatile, unregulated, and, let's be honest, a breeding ground for scams. From rug pulls to exchange collapses, the risks are endless. But here's the thing, it's not all doom and gloom. Crypto can be profitable if you know what you're doing. The key? Educate yourself and never invest more than you can afford to lose. And speaking of scams, our next story is about a company that fooled everyone, including some of the smartest investors in the world. You won't believe how they pulled it off. This is Elizabeth Holmes. She was once hailed as the next Steve Jobs. Her company, Theranos, promised to revolutionize healthcare with a device that could run hundreds of tests with just a drop of blood. Investors poured in over $700 million. There was just one problem: the technology didn't work. Holmes lied, manipulated, and deceived everyone, from investors to patients. And when the truth came out, it was too late. The company collapsed, and Holmes now faces prison time. But here's the scary part: even seasoned investors fell for her charm. So, what's the takeaway? Always question the hype. Do your research. And remember, if it sounds too good to be true, it probably is. So, what have we learned today? Investing can be risky, but it doesn't have to end in disaster. Do your research, diversify your portfolio, and never invest based on hype or emotion. And most importantly, learn from the mistakes of others so you don't repeat them.